If you look at the post I made on my Twitter right before doing this stream or space, whatever it is, I asked everyone, what would you like to ask? And there was a few ladies that asked, hey, I'm assuming they were ladies. I apologize if the name made me think that you were female and you really aren't. But the question came up like, how do we endure the hardships, basically? And how do you get past all that psychological barrier? And how do you keep going when it feels hard? Well, first of all, you got to give yourself permission. Like I've told my private students, like you have to give yourself permission to do it wrong once in a while. Like you have to do it because if you think you're going to walk out there, open up an account, even if you trade with such small, insignificant amounts of money in terms of risk, if you think that that's going to be the solution to why you're going to never have a losing trade, that's nonsense. Like you're going to lose money. It's going to happen. You need to plan for it. You need to make yourself ready for it. Psychologically, preparing yourself, okay, I'm going to lose money. What happens if I do lose money? Most of you want to just, teach me how to buy and sell. How do I know when the bias is bullish or bearish? Because if I can just have that, all I got to do is take a fair value gap. See, now we went from, if ICT could just get to the point already and tell us how to determine bias, which I've already done. I've done multiple lessons on that. But the problem is you want everyday bias. And again, you're taking a sound principle or teaching or lecture point that if you just simply use the way I teach it, wait for these choice setups, you'll know the bias when it matters most. But the problem is you're impatient because you want it to be everyday bias. You want day trading to be everyday trading. And in everyday trading, you want every session trading. And in every session trading, because you said ICT, you can trade the hourly candle and treat like the daily range. Yes, I can. But I can do that. It's not the same thing for you to expect you are able to do it. You see what's happening? You're placing so much of an Olympic expectation on yourself. You've taken the normal threshold of difficulty, which comes to everyone in this industry. And I was not exempt of that. I mean, I went through a lot. 6 years of thinking I had it. Nope. Back to the drawing board. Thinking I had it. Nope. Went back to the drawing board. I technically had it 3.5 years in, but I abandoned something and chased other things. And I went back to where I started seeing results, and then boom, there it was. But you're going to have hardships. You're going to have issues where, you're going to feel like you got it figured out. You'll have a week or two, maybe even a month, where you just did everything right. And this is where you get in trouble, young men. You think that you got it all figured out, and then you have a losing trade. And it might not even be a significant loss. It might be something so small, 0.5% or whatever. You save the stop from getting hit full on. Like you had a 1% risk or 2% risk, and you saved it from getting knocked out, but still it's a loss. Now, you're not looking at the fact that you were able to mitigate the total 1 or 2% hit to your account because you protected the stop loss. You saw it was going to turn on you. You closed it before it went to your stop. That's commendable. That's a skill set, not to promote the idea of paranoia, but if you're beginning to trade with live funds, if you do that initially and you are aggressive about cutting your losses, that alone would probably keep you alive long enough to find a way to grind through the adversities. Because when you get a real good winning trade, it doesn't wait around. It just takes off. It just runs. But the problem with this business is you want to second guess yourself so much because you're trying to avoid losing. This is the number one characteristic of a losing trader. You're willing to hold on to a losing or questionable trade. Come hell or high water, you'll hold that. It isn't moving like you wanted it to, but damn it, you're not letting go of it. Because what happens if you close it and it runs in your favor? What happens if you're fucking wrong and you just held on to it too long? That's what usually happens. See, if your trade is right, it's going to show you right away. If it's, hanging around and just, beating around the bush, it's not trying to run off and move into profit for you, that's a warning sign. Either you entered too early or you have a dog. Okay. And unfortunately, holding on to a questionable position sucks because you're spending mental capital. Whereas if you flip that coin, because you're placing so much emphasis on not doing it wrong, when you do get a quick runner and it starts moving, you abandon where you think it's going to go and you close the trade quickly. That paradigm shift that's necessary to fix that, that's something that has to happen over time. And it's a conditional thing that you forge through coping skills, going through the processes that I've taught in great detail on my YouTube channel. But the problem is, you're one of those individuals that want ICT to get right to the point. The point is, you don't listen. That's the point. The point is, you don't fucking listen. You're not trying to take good advice, and you just want to do it your way. You want Burger King fucking mentorship. Okay, have it your way. Well, have it your way mentorships don't make millionaires. That's the way that works. Okay, it creates emotionally charged traders that hold on to losing trades too long. And then when they fail and blow up in your face, that creates that loser cycle where you want to try to get it back right away. You know what that means? You're going to lose more fucking money. And it just keeps repeating and repeating. And then finally you blow your account. And then what happens? You beat yourself up because you're going to look at the trades and say, why the hell did I even do that? There was nothing in the market. Why did I buy that? There was no fair value gap. There was no order block. It didn't even take sell side liquidity. What the fuck was I doing? You're chasing emotional charges that you put behind that decision. You completely abandon all reasoning and why you even are trading. You're not the only one that's done that. Everybody does that. Everybody does it. Why? Why is it so hard? Because you're competing with yourself. You have to live with yourself. You have to wake up in your own skin tomorrow and the day after. And the decisions that you make today and yesterday and what you'll make tomorrow come with consequences. And see, you want consequences to be sugar coated, almost orgasmic in trading. You want them to be happy endings. Not to sound crude, but that's what you really want. You want a chance meeting with a stranger and a knock on your bedpost. That's what you want. You want every night to be a one night stand and it's all good, feel good moments. I'm sorry. Sometimes you're going to wake up next to a hand grenade, and this is the way it is. And you are going to hurt yourself. But you got to say, look, you know what? I got pip drunk. I made some poor decisions. Thankfully, I'm not married to this person. And just slip out before they wake up and just live on, continue to trade and try not to do that same thing again. And this goes for both the ladies and the men. You know what I'm talking about. Somebody just whispered, I just did that last weekend. How's he know? I'm watching. I got my eyes on you. But the reason why it's so difficult trading is because you're competing against a fucking savage in the making. You are such a formidable adversary that you alone are the one that's holding yourself back. Nobody else is holding you back. These yahoos on the internet that say what you're trying to learn doesn't work, and all that didn't stop you. People commenting saying, oh, well, you're doing this and you're doing that. This is the real way of doing it. That doesn't motivate you to go chase that stuff. You're sticking to this. But you, you're the adversary. You're the one that's making it hard for yourself because you're trying to make Olympic feats out of something that's not necessary. You want every transaction to be perfect. And I mentioned this to my private group. I said, unfortunately, my approach to trading, and when I show my examples, and I show my examples are very consistent. You have people out there say, well, he's only cherry picking. When I show you the full account and I show you that there's no other trade executions and this is the only thing there is, and I call the only moves I trade on, I call the levels, it's never going to be enough. So I don't care. When I go into 2023, I'm not trying to prove anything. I want to just enjoy teaching. But my students, unfortunately, see this in me and they think that that is something that they can obtain right away, right from Jump Street. Like they think, okay, I can do what ICT is saying in the charts. When he points to it, I can see it. It's real easy. But when he doesn't talk about it, I can't see it and I try to do it on my own and it blows up in my face. Okay, well, you're trying to force an issue. Number one, you're trying to force something that's not practical. You're trying to be someone that you can't be right now. And that means highly precise, detail oriented, and results driven. See, you're trying to be results driven without the two factors I just mentioned. Like you have to build discipline. That means you got to go through trial and error, feel that pain that you're trying to avoid. So you're trying to hide from that. Like, no, I don't want to get a paper cut. I don't want to get a scratch. Somebody's going to ask me what I did today, and it's going to be a losing trade, or they're going to ask me, why did you do that? There was no reason, because everybody wants to be an armchair quarterback. Everybody wants to tell somebody how they do it better, but they ain't trying to show you what they did. Okay, so that's the problem with this industry. It's so ego driven, it's so image driven. You got to remove all that stuff, remove all of it. Your expectation should be low, low, very, very low objectives, low hanging fruit. That's how I teach it. And if you're comfortable in your own skin with that, even if you get it wrong, those little bruises, those little nicks, those paper cuts, when they occur, eh, it's not that big of a deal. It might be a nuisance. You might look at it later and say, oh, well, yeah, I really didn't see what I thought I saw at the time. But you know what? From a monetary stance, it really didn't do too much damage to me. And, I'm still learning. What did you just do by doing that? Number one, you acknowledge that you made a mistake. There's nothing wrong with making mistakes. Mistakes are opportunities for you to learn. But why the fuck do you want to blow your account to learn? You're not learning anything from that. Okay. You're learning to gamble. That's what you're doing. You're learning how to gamble. And honestly, there's very, very few gamblers that make it in this industry long term. They just don't exist. I'm not saying that you can't gamble and make money, but the problem is the gamblers don't generally know when to get up and walk away from the table. They think, well, I had a flash in the pan, win in crypto. I bought it. It ran up really good. It's going to keep doing that. Well, they found out that it doesn't work that way. Okay. And everybody that goes into these crypto markets think that they're going to see that stellar bull run again. And they discovered, just like every other market, that's not what they do because they have unrealistic expectations. They have Olympic expectations on a market. They don't always parabolically move. And if you have a trade and you put a trade on, if it doesn't give you immediate feedback that you're doing the right thing or holding a potential winner, you have my permission to kill the trade and feel no reason why you should feel any regret about it, even if it takes off in your favor. Because if you do this as general practice, you're going to find that you will get out of dog trades. Lying dogs make no money. Okay. They got to get up and run. If they ain't running, they're not going to get to your draw on liquidity. That means they're not going to go to your profit. You're not going to be with the partials. You're not going to pay yourself. You can't get paid, and it's going to be frustrating. So why the hell are you in it? Why are you in that trade? You're trying to make a diamond out of a turd. You can polish it all the hell you want. You're just going to get shitty hands. That's all that's ever going to happen. You're going to have a mess trying to turn something that's really a bunch of shit. It's never going to get any better. Why? Because in your brain, in your mind, you're telling yourself, if I get out of this, even though I know in my gut this isn't moving right now, but if I close it, it's going to run. And I'm going to feel like shit about that. But you don't do that when you start thinking, this isn't moving for me. Let me start giving myself a time stop. Ooh, what is that? Something I do. If I see something, like if I buy a fair value gap, Okay, for instance, look at the last trade this did on the S&P. I shared it on non-farm payroll in the app a little bit after non-farm payroll's first hour or so. I went long and I traded up into a sell sign of balance, buy sign of efficiency, SIBI. Let's say I bought that fair value gap and it just hung around for, I don't know, I can't recall what time frame I was on when I was looking at, but let's just say it stayed inside the fair value gap for, if it was a 5 minute chart, say there was 5 candles that it was constantly dipping into it. Okay. I don't mind a PD array being revisited and repriced too, and that's fine. But if it's hanging around like that and hasn't ran for the buy side, I start giving myself a time stop. So I'll give it usually 30 seconds to a minute. As soon as I recognize this and I start feeling that 30 seconds to 60 seconds, I'm counting down. I'm literally looking at the time in the lower right hand corner of my charts. I'm saying, okay, if I don't see positive movement in my favor, I need speed and distance. Okay. If you ever watched any of my recordings where I'm doing executions or whatever, sometimes you'll see me type in there and say, I want to see speed and movement. I want to see how fast it can run away from where it's at. I'm doing that countdown in my head. Whenever I type that out, the internal dialogue that you're not aware of, I'm telling you right now, is I'm placing a time stop on it. Yes, I have a stop loss on it. So if it is against me, it'll stop me out and take me out of the trade at a loss that I'm willing to accept. But I also, at these points where the market starts to like hang around and isn't really running for me yet, but it hasn't really scared me to the point where my stop loss is in jeopardy. It just isn't moving around. It's just like dead. It's a dog. It's a lying dog. It hasn't got up and started running yet. As soon as I start feeling that, I say, okay, look at the time. It's got up to a minute to start moving for me. Now, some of you might, well, good grief, Michael. 30 seconds, a minute, that's not enough time. Maybe for you. But I know that there have been so many times in my career where if I just simply would have done that, I would have avoided lots of losing trades. Lots of losing trades by simply limiting the amount of time I hold on to dogs. You got to let your runners show themselves. And if they don't want to join the race, move on to the next one. And yes, that means commission costs are spent and you didn't take anything out of it. So what? That doesn't feel bad when you do that. Because if it doesn't run, which that's going to be the majority of the time, but your brain is telling you it's going to run and it's going to do 500 handles. No, it's not. Stop thinking like that. You have no idea how every trader that's unprofitable thinks the same way. It's almost like they read from the same books. I'm saying that with my tongue in cheek. That's what you've been conditioned to believe, to accept, and want in trading. You want to hold on to a trade. You got to trade your plan and plan your trade, right? So what does that mean? Well, you got to get into the trade and come hell or high water, your stop loss gets hit or it moves in your favor. That's bullshit. That's why people lose money. That's the reason why people lose money. You have to kill it. If it's not working for you, fire that position, get rid of it, hire another one. And when you get the right candidate, it will work for you. But you cannot be fucking around with these lackluster moves that aren't delivering for you. If they're not running for you, as soon as you start feeling that unction, you know what? Just I wish this thing would move. As soon as you just thought that or said it out loud, that's the time to start the timer. Okay, you got 30 seconds to 60 seconds. If it doesn't start moving in my favor, this is a dog and I'm killing it. And I don't give a fuck what it does. I guarantee you if you do this, you will protect yourself more than you'll find these big runoff moves that you think you're going to lose if you get out of the trade. Let me ask you a question. How many times do you see big runoff moves? You see them all the time in hindsight. But how many times in your own personal analysis have you seen big runoff moves? You're not seeing them every 5 minutes, folks. Come on, be realistic. And it gets back to why trading is so hard. Your imagination is running wild. You don't have experience. You're just now beginning to learn how these markets work. And you think that every setup is going to be these mega trades. It doesn't work that way. Bread and butter setups happen every single day, which is the reason why I beat that drum all the time. That's not an Olympic feat. Simple little things. The little things repeat every day, and you can make fortunes with little movements that are highly consistent. But you can't over leverage them and hold on to them and demand that they pay out bigger yields than they're really warranted. So you have to be reasonable with yourself first, because do you have the skill set that you're trying to imagine that you do? Going into the marketplace expecting no drawdown, no losing trades. See, when I share my analysis, when I share my expectation on where I think the market's going to go, you only see what I show you. Now, that comes with people that can't stand me. They'll say he's cherry picking. That's the only thing I said. So those results do what for people that are in support of me? They think I'm infallible. So you're learning from someone that shows high degree of consistency and precision. So therefore, you should expect what? High degree of consistency and precision, right? Over time. See, you have selective hearing. Just like I'm telling you now, you will learn those skill sets and you will achieve that, but you will not achieve that in your first year. It won't happen. It's going to be a lot of discovery, personal discovery, the psychological and emotional things that you got to conquer in your first year and a half are so significant, and not enough said about it. It's one thing for someone to say, "Hey, look, ICT, get to the point. Give me something I can work with." Okay, I did that. 2022 mentorship. It's as easy as you're going to get it. There is nothing else easier out there, Raja. Yeah, he went there. The bottom line is this: you can make it complicated, and majority of that's occurring between your ears. What you're thinking, what you're afraid of, all those things. If you stop and you simply journal all those concerns, those euphoric feelings. Oh, it's going to really start moving beyond my target. How many times you got into a trade like that? You get into a trade, it moves for you immediately. So, okay, great. You got a runner now. But then it's running quickly to your objective. So now you start thinking to yourself, okay, well, I had 15 handles as an objective on SPOOs. I'm trading ES and I wanted 15 handles. It's already cleared 10 and it doesn't show any sign of wanting to slow down. This could be one of those 50 handle days. Okay. Well, if you haven't taken off 80% of your trade at your target, you're messing up. You're making a mistake. Now, there's nothing wrong with you saying, okay, I'm going to try to hold for 50 because it's showing signatures that it wants to really run. But you got to take 75 to 80% of your trade off where you wanted to get out at. Roll your stop to a point at which where you make 25% of what your total range would have been and just let it go and see what happens. If it comes back and takes you out at your stop loss, so what? You had a chance to see what it was going to do. But you don't say, okay, I'm going to ignore where I thought the market was going to go, take no partials. I'm staying with it 100% because, I put the initial risk on. So I need a higher R multiple return so that way I can go on social media. Again, you're trying to do something that's stupid. That's stupid. You're trying to trade public image of yourself. And then you wonder why you're in drawdown. Everybody on Instagram that's doing that, all these marketers that show themselves living the fast life, supposedly making money all the time, flying on planes and going to places that they really can't afford unless they have mentorship people paying them. Okay, I'm telling you, they are trading their public image. That's what they're doing. That equity of their opinion from others, their, their, well, the perception of others about them. That's what they're trying to have new equity highs in that. And that's the problem. When you go out and you start challenging people, especially people that's been doing it a long time, and you can't bring those results, that will rattle you, especially if you're a male. A male takes that personal. Again, it's like you're saying that they aren't that large downstairs. That's how they'll take it. That's that's what it feels like for a man in trading. If they are sizing up with someone else or someone else is calling them or tapping them on the shoulder, that feeling of I got to live up to that. Because what if everyone else thinks that I can't do this and can't do that? And then what they do is they start doing things that they can't really do. And they are regretting it. My FX books, announcing they're going to do funded challenges, all that kind of stuff. Don't do those things. If you don't do those things, I guarantee you your results will be phenomenal because you're placing no image in the results. You have no expectations held of yourself. You're not saying, I have to hit 20%. I got to do 10% a week. I got to do 100% in a month and a half or 2 months. All those types of goals are stupid. If you haven't been trading for at least 3 years and you're trying to do some stuff like that, you're really making it more difficult than it needs to be. Versus, what happens if you just try to make 2% a week? Would you be happy if you had a funded account with, I don't know, $100,000 and you tripled it over the course of a year? I mean, how many of you would be like, fuck you, I don't want $200,000. Are you crazy? $200,000? What the hell would I want to have $200,000 for? That's insulting, ICT. Why would you even ask me that? That's what some of you are basically saying without saying those words because you want to double your account every month. What would $200,000 a year do for someone like yourself? Would it change your comfort? Would it make things a little bit easier? How about get yourself out of debt? Well, you don't have to work very hard to get that kind of result. It's very small little micro moves that you have to do. But when you make them for the week, you have to stop. Don't place any more Olympic feats on top of you. Don't try to live up to everyone's expectations of, hey, you're an ICT student. So you should be out there killing it like ICT style. No, no. One good trade a week, do it and be done. It's about making money. It's about making money, folks. Okay. It doesn't matter how many little hearts you get behind your Twitter posts or how many fanfare you get from all these other, I don't even know how Instagram works. Whatever that stuff is that would fluff a person up, those things don't matter. Making fucking money does. Paying your bills does. Being able to eat, taking care of your family, paying your mortgage off. How about getting a house without a mortgage? Paying your car note off so that way you don't have to make any payments. New set of duds, clothes, doing something for someone that wouldn't expect it. Those types of things. That right there, that is a real motivator. But that doesn't make sense to most people. They want to hear 200R multiple trades, but you're going to learn from the secret market maker guy that used to work for XYZ Bank. And here's the proof. He's trading with nanolots. The fuck? Are you serious? And that's what's going on. That's the proof they're showing. And they're still in nanolots teaching. So I told myself when I was going to do this space, don't go off the rails. Just be polite and try, be nice. I'm trying to be nice. But when you really look at all this bullshit that's out there, it's like, really, man? Really? Like, all the things that could be done. These are the shitheads that go out here and do this stuff. And they make it about image, the things that you can't pay your rent with. You can't put groceries in your refrigerator, in your freezer, with worshiping these clowns.